Today, pre-election housing finance is weaker than expected. Hello again, it's Martin North from Digital Finance Analytics. Welcome to our latest post covering finance and property news with a distinctively Australian flavour. The ABS released their lending flow data today for April, and the hoped-for recovery, as claimed by those lauding the higher auction clearance rates, did not eventuate. So analysts are suggesting that the April update may have been affected by the timing of Easter and Anzac Day public holidays this year, which would have reduced the effective working days available for processing approvals. Or perhaps the enthusiasm was overblown. The total number of occupied loans approved, excluding those for refinance, declined 1.1% in the month, when people were looking for a small fall of around 0.3% over the month, so considerably worse than expected. And that followed a 2.6% fall in March. The value of investor loans, excluding those for refinance, fell 2.2% over the month, and that's a pretty similar decline compared with the previous month of March. And the monthly tempo of falls has eased just a little from 4% seen over the second half of last year, but it is still a long way from being stabilised. And while the combined total value of housing finance approvals across both owner-occupied and investor segments, and excluding refinance again, nudged up just 0.2% in the month, it is still, wait for it, down 17.3% over the year to date. And owner-occupied lending flows are down 13.5% year to date. These are considerable falls. Across the segments, we see a slight lift from first-time buyers, looking at trends over more than a decade, although still down 7% from peak. Upgrades are down 21% from peak, investors are down 48% from peak, and foreign buyers have all but disappeared off the radar. First-time buyer approvals are down in most states once again. And we saw weaker construction news, with construction-related approvals for owner-occupiers down 5.2%. This reflects the falls in house and low-rise approvals that we've seen recently. Across the states, finance flows were down 22% over the past year in New South Wales, 17% down in Victoria, 15% lower in Queensland, 14% down in Western Australia, 2% down in South Australia, and 5% off in Tasmania. So not much sign of a recovery there. And by state, the number of owner-occupied approvals showed the biggest falls were in Tasmania, down 4.2% over the month, Victoria down 2.5% over the month, and Queensland down 2.4% over the month, with New South Wales recording a very slight rise, up 0.3% over the month, but down still 15.7% over the last year. All three large eastern states are down over 15%. And it's worth noting that the average loan size continues to rise, suggesting that lending standards are being loosened, well, maybe just a little. But it's important to understand, of course, that this is all before the election. So it will be interesting to see whether over the next couple of months there is some pace picked up. Of course, all the spookers are out there saying everybody's talking to mortgage brokers, everybody's going to the bank asking about mortgages. So we'll see. But remember, a lot of those transactions are likely to be refinancing of existing loans when people are trying to get lower rates. And that will be very interesting, of course, because if they are successful in getting those lower rates and overall growth still is not very strong in terms of new loans, it could be that the banks are net going to be worse off because effectively they're trading off higher interest rate loans to lower, cheaper loans to attract new refinance business. Hi, excuse the interruption, But if you're getting value from this post and have not done so, please consider subscribing to this channel or ring the bell for custom alerts. Plus, please consider supporting our efforts. You can make a one-off donation via PayPal, here's the link, or subscribe via Patreon for as little as $3 US a month or more to get access to exclusive additional content. Alternatively, you can also donate using Bitcoin. Here is the QR code. The links are in the comments below. I really appreciate your support, which enables us to continue to make more great content. Thanks very much. Now back to the current show. So to me, the big question is, will there be a bounce? How much of a bounce will it be? And how long will it be to work through? My own view is, and you've heard me say this before, there will be a slight bounce. It will be quite limited, and it could well take quite some time, but not sufficient to start home prices climbing away again as they did in the previous couple of downturns. I still have the view that we're in for a long, slow grind, and whilst in selective markets there might be small rises in some areas, there are just not the conditions in place to fundamentally turn the market around. So despite all the spruiking and all the calls to buy now and all the great rates that are out there, the truth is I think that the housing market is still looking pretty shaky. But we'll look at the data as it comes through, and of course, if the data changes, you'll be the first to know. I'm Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you again next time.